As new joinees enter the workforce, they are well equipped to manage their careers thanks to the education and training that they have received. But very few are prepared to manage their finances, having never received any formal education for the same. With an aim to guide these individuals on better managing their finances, L&T Mutual Fund presents Investment Ki Paathshala, partnered by ET Now, where we invite 4 first jobbers into our studio and have them interact with our experts. Hello and welcome to L&T Mutual Fund presents Investment Ki Paathshala, partnered by ET Now. Now, it's a very special show and I love the name Investment Ki Paathshala. We've all learned so much about our career, how to excel in our career, but we've hardly ever learned how to manage that money that we've earned, that we've made. And this special series will aim to do just that. I'm joined by 2 very special experts here who will be guiding some first jobbers that have come into our studio. First up, let me introduce my guest to you. We have Vihang Nayak. He's a fund manager equity at L&T Investment Management. Hi Vihang, thanks for coming on the show. Hi. And we also have with us Hemant Rustagi. He's the CEO at Wise Invest Advisors. Hi Hemant, thanks for coming into the show. Let's move on to our 4 special guests who've come into studio. Hi guys, thanks so much for coming in today. Aparna, first let's start with you. Tell us a little bit about yourself and what's on your mind. What do you want to ask our experts today?
Hi, I'm Aparna Madan. I've been born and brought up in Ahmednagar. I've done my education over there. After my education, I've come here to Bombay, the city of dreams, to do something and make my mark. I've been working with L&T's ever since I moved to Bombay. I love reading, singing, dancing, and doing some research about whatever's trending, whatever other trends in the market and all of that. Well, I've had a failed attempt because I started investing in SIPs to save tax. But I feel I want to continue that because I've set some goals, with who I consultant for that. But I want to know what other instruments could be beneficial for me to save tax. Okay. And then how, when you keep, growing and your money grows when you grow, how do I then, increase that, or what do I do to, save tax?
Superb. Vihang, you want to take a crack at that?
Saving tax, tax has a big impact on the overall compounding that you have as a investor. All of us know that there are fixed income investments, there's PF, there's these long-term fixed deposits, and there are equity mutual funds that are normally available. You don't need to look at tax, just at the level of investment. You should also have to look at tax when you're, redeeming, that instrument. How are you taxed at that stage? So obviously, none of us can be an expert on everything. If you need a haircut, you go to a barber, right? Yeah. Don't attempt a haircut on your own. That's where you need tax experts. That's where you need investment advisors. And I would recommend, apart from these plain vanilla instruments, there are many others that we could, that a tax expert could help you understand better.
2 things. One, I think it's great to see that you started investing. Obviously, as it happens with everyone at the start of the career, you're not very sure as to what are the right options for you. My advice to you would be, and for anyone who's basically starting out and wanting to save money to save for taxes also, make tax saving as a part of your overall investment plan. Never look at taxation as a separate, process. Because when you do that, you always end up making some mistakes. The moment you make tax saving as a part of your investment process, what you do in your investment process is, you decide what you want to do with your money. Now that you started earning, you should know what you want to do with your money. So you have goals which you want to achieve in short term, medium term, long term. So you make a financial plan kind of thing. It can be a little difficult at this stage to list out all the goals, but nonetheless you can start the process. The moment you do that, okay, let's say you have a goal which is a long term at this stage. So you can clearly look at ELSS as a part, because ELSS is an equities fund and it's a long-term investment. So the moment you try to align tax investment to your goals, you can choose. So if you're not looking at something which is beyond 5 years or 3 or something like that, you can even look at FD because then you don't want to take a risk. So align that, make tax saving as a part of your investment process. I think it'll do wonders for you.
Thank you.
Super, great. Let's move on. Kiran, tell us a little bit about yourself and what's your question for our experts.
Hi, my name is Kiran Nair. I've been born in Kerala but brought up in Mumbai and Pune. I've done my schooling from Pune And after my 12th, I decided to leave my house and pursue my engineering, which was from Mumbai. I did my engineering in electrical engineering from VJTI. Then I decided to pursue my MBA because I had this affinity towards finance and numbers. Then I did my MBA from JBIMS, Jamnalal Bajaj, Mumbai itself. Currently, I'm working at JSW, Jindal Steel. Talking about myself, I love to read, mainly about non-fiction. I'm not much into fiction and all. Secondly, my hobbies are playing table tennis. I'm much of a sports enthusiast. I'm a tennis lover, to be precise. My basic question to our experts is that if you look at it from an investment point of view, how lucrative do you think real estate market is, considering the current economic scenario?
If you really look at most of the households in our country, what we are taught by our parents is look at real estate, look at gold, or look at fixed deposit.
Yeah.
Because that's what they have done actually, and they feel that there's where the safety is. Because when you talk about financial assets, you don't get to touch and feel anything.
Yeah.
So you feel very secure, safe. The problem with real estate can be a good investment, no doubt about it. But you need to look at what stage of your career you are. The moment you buy real estate, you're committing too much of your money into an asset which is not very liquid.
Yeah.
So it can so happen that you may actually end up compromising many of your other goals because you're committing too much money. Okay, so there are two reasons why you buy a real estate. One is because you want to live there, it's for your own personal use, and second is as an investment. Okay, as an investment, I don't think it's a great idea, honestly. One, because of the way the real estate market is behaving and the way I see it going forward. I feel that someone like you should be looking at financial assets. And within financial assets, obviously, we talk about, let's say, equity for the long term. So you have two options to do it. Either you can go directly in stock market or you can take mutual fund route. For someone like who's starting out, I think the best route is mutual fund because you have full-time professional managing your money. You have a number of options, the flexibility, the tax benefits. Okay, so I think, for example, I tell you, when we talk about investing directly, compare that with a mutual fund. You buy a stock, you sell within 1 year, you end up paying 15% short-term capital gain. Yeah. The fund manager does that. You take your money after 1 year, you don't pay any tax, or you pay 10% tax. So there is a difference there in clearly because you are giving your money to the professional to manage. It's a diversified vehicle. So start with that. I think focus on financial assets at this stage. Once you've built up your portfolio, once you know that you've taken care of all your goals, maybe that's the time you can look at real estate.
Super. Vihang, I wanted to get you in on this. One query that is often asked by people is, mutual funds are confusing. Which is the kind of mutual fund that I should go? How do I? So, if you could just give us a broad base guideline as to the kind of mutual funds are there, and at this age where they're a few months or a few years into career, what would be their ideal mutual fund to start with?
Right, that's a great question, Sumit. So broadly, two segments of mutual funds: fixed income, equities. Depending on your risk-reward, risk-taking abilities, I think one should decide whether to invest in equities or fixed income. Equities, obviously, high return but bigger volatility. If you're a heart patient, not the best asset classes. If you love more certainty for lesser returns, fixed income is the way to go. Inside of equities, you would have small cap funds, mid cap funds, tax saving funds, large cap funds, diversified funds. I know it's quite confusing. Believe me, it's not. As a first jobber, as a graduate straight out of college, I believe that your risk taking ability is higher than, let's say, somebody who's retiring at 60. If you and your time horizon is also way higher than that. So if you have that kind of a time horizon, I would advise a higher allocation to equities. Maybe you could also have a higher allocation to more volatile kind of funds like the small cap, the mid cap, as well as the diversified funds. And obviously, if you want to save some tax, like Aparna said, you could look at the ELSS funds as well. Fixed income funds, on that side, you have various durations. You have the liquids, then you have ultra short term, etc. Usually depends on your time horizon, where, that you invest for. And decide a fund for that time horizon.
Okay, super. So again, like what Vihang also said in the middle, it sounds a lot of very confusing, but let's look at it from this. And I again have been, somebody guided me on this earlier. It's like we've spent, how many years getting your degrees, for this, right? I mean, undergrads and then postgrad degrees. We at least spend a few hours, maybe not every day, at least a few hours every week or even once a month, spend a few hours to learn ourselves, research on the internet or watch television channels, read newspapers, magazines, just to self-educate. And then it all starts becoming easy because you're working so hard to earn your money. We can give in, I'm sure, 5% of that effort into managing our money, to knowing how to manage our money, you know. Arundhati, tell us a little bit about yourself and what's your question for our experts?
Hi, my name is Arundhati Singh. I was born and brought up in Noida. After I graduated and I got a job at Ernst & Young in Mumbai, and now I work as a risk analyst in the advisory team for the media and entertainment sector. Being here has been a very exciting experience because this is the first time that I've lived away from home, which was not college. So there are a lot of like adult responsibilities that are suddenly on me about like maintaining a house and maintaining expenses and taking care of your finances now that I'm earning my own money. So it's been very interesting, very difficult, but there's been a lot of learning. My question is that for people who are financially illiterate, what are the steps they should be taking to begin their financial journey?
Interesting. Right. Hemant, first you, and then I'll come to Mihang.
Well, I think if you're not from the field of finance or in the field of investments, when you start your career, obviously you kind of feel lost saying, what do I do? I think there are 2-3 things, important things. We all understand the value of money. Okay, we may not understand what to do with the money in terms of investing. I'm sure all of us know what to do with the money, and we know how important it is for us. So I think there are 2-3 things you need to start, working out clearly. One is that you need to put some money aside for your future, okay? And the question that comes is how much of that money should I be putting aside? My belief is that when you at the start of your career, maybe 20-30% is something that you should keep it aside, and then start looking at what you need to do with the rest of it. What it does for you is brings in some kind of discipline. Look, when we talk about investment, we say that we don't understand much of it. Trust me, investment is a very simple process. It may sound a bit complicated, but if you really plan it well, the way you plan everything else in your life, I think it becomes very easy. So one, we need to understand that we need to be a saver first to invest. How do you become a saver? That means you keep some money aside. So 20-30% is what you start. How do you get a fix on what will be good enough amount for me? Is when we talked about earlier, like you start investing, you have a financial plan in place, you know exactly what you want to do with the money, how much money will require to invest for each of your goals, and that becomes your guiding factor. Okay, I'm investing 30,000 today, I may actually need to invest 50,000 to achieve my own goals. It also tells you how to prioritize which are the important goals for you, and if you need to save 50,000, how do you do that? So ultimately, it all depends on how you bring in discipline into your investment process. Second most important thing is, are you choosing the right asset classes? Many times we make a mistake of going straight away to the option, and why tell you how it happens. Equity markets are doing very well. Somebody comes and tells you, why don't you put money in equity? You'll make a lot of money, so you go and buy equity. When the equity markets are down, somebody comes and tells you, don't go to equity, put your money in FD or buy some debt fund. You put all your money into debt. So either you make your portfolio very aggressive, or you make your portfolio very conservative. You don't have to go by market moves, you have to go by what your requirements are. That's what exactly I said in the beginning. You need to plan your investment. So if you have a long-term goal, okay, which is let's say 10-15 years away, you don't have to worry about today's market volatility. You can continue investing in that. If it's a medium term, 3, 5, 6 years, you can look at hybrid, a mix of debt and equity. If it's a short term, your priority is safety of capital. While you're looking at safety of capital, you also need to see which are the options which can give me higher return and more tax efficient return. That's where mutual funds come into play. And they're much better, efficient investment vehicle compared to your bank fixed deposit or any other instrument.
Also, to add to what Hemant said, it's a very relevant point. How do you understand so many things? If I were to understand about your field, I won't be able to. I would be equally clueless, right? It's a very interesting thing. For example, for a new graduate, like someone who's maybe in his first job, if you want to afford the best, let's say, interior decorator, very difficult to do that with the salary that a fresh graduate gets. If you want to get the best dress designer, right, very difficult to afford that. But if you want to afford the best fund manager, it only takes 5,000 rupees, right? You could invest 5,000 rupees in a mutual fund, and the best fund managers and his research team works for you. So in that sense, it is the same thing for the advisors, right? So in that sense, rather than really racking our brains into understanding the nitty-gritties, or in worst case going direct in equities and then paying market its tuition fees, it is much better to maybe pay that AMC a couple of percentage points and afford the best brains to work for you.
Let's move on. Amay, tell us a little bit about yourself.
Hi, my name is Amay Ahirao. I am from Nasik. Did my schooling as well as 11th and 12th standard over there. My family, my mother works as a senior clerk in a nationalized bank, and my father has his own business as a civil contractor. Did my engineering from Vellore Institute of Technology in Vellore. So Vellore was basically like Nasik, but then shifting to Mumbai for my MBA was kind of a big transition for me. After my campus placements, I got into an IT firm as a consultant. Over here, it's been a very big transition. I've really experienced Mumbai, so I currently stay in Lower Parel, and it's like a very different kind of environment. My question for the experts is that it is a two-parter question. One is seeing the current economy. What do you think are the short-term investment options that we should look towards? And the second is that since India is so focused on gold, so what are the different options? Like I had read that we have physical gold, we can do in gold sovereign bonds. So what are the various options which we can invest in gold, and whether investing in gold is a good idea at this point of my career?
Interesting. So, Hemant, you want to start, and then again Vihan?
Yes, I think very interesting questions. And two, three things. You talked about looking at the current scenario where your money should be invested. You also mentioned about short term, I think. See, when you're looking at short term, as I mentioned earlier, your priority should be that money should be safe. So irrespective of whatever is happening in the economy, on the market, shouldn't be really bothered about that, because you have too short a period for you to be looking at all these things. So there, if you look at in mutual fund, for example, we have these liquid funds and we have short-term funds. You can look at that. In terms of gold, gold has a role to play, but not at the start of your investment career, I would say. You need to build, wealth for different objectives that you have in mind. Generally speaking, the thumb rule is 5 to 10% of investment can be in gold. But it again depends on, it's a thumb rule. It doesn't apply to everyone. At the start of the career, I would not really recommend looking at gold. As I mentioned about earlier, even about the real estate, this is not the time for you to start looking at these physical assets right now. So you begin with, financial assets. You understand how different asset classes behave. You understand the meaning of what asset allocation is and how different asset classes behave in different times. Once you've done that, you reach a stage where you start looking at maybe some part in gold. In terms of options, I would say the best option which is available is obviously not to look at physical gold. If at all you want to invest in gold, it's basically, there are gold ETFs, there is sovereign gold bonds. According to me, I think the sovereign gold bond is one of the best options for simple reason, because the complaint against gold is that it doesn't earn anything for you. And this is the only option which gives you 2.5% interest, though it's taxable. Plus, if you hold it for 8 years, the gains that you make are tax-free. So I think in terms of efficiency, in terms of getting benefit of movement in the gold price, in terms of earning something out of it, I think sovereign gold bond is a good option.
Interesting. Vihang, before you take this crack at this, I just want one thought I've had is that very often when we're young, we're raring to go. We I want to achieve the maximum in this 1 year. I don't want to wait 10 years, 15 years, 30 years. No. So I feel sometimes maybe as a first jobber, that comes into the investment strategy also. What I've understood over time is that whether it's important to be disciplined, to be continuous. As Warren Buffett says, don't time the market, it's your time in the market. Your experience on this to kind of, rest these fears that people have that I might miss out on the next big thing. Sure. That's what I think the worry is.
So let me explain this, Sumit, with a case study, if I have like a couple of minutes.
Yeah.
So two graduates graduating at the same time, right? graduate 1 decides to start an SIP with an equity mutual fund for 8,000 rupees a month. Very affordable, everybody could do it. That's 1 lakh rupees a year. Right? Graduate 2 doesn't decide to put money on his first paycheck. He waits because he doesn't know. On their 30th birthday, so 10 years, let's say you graduate at 2021, on 3031, after 10 years, the first graduate and the second graduate meet, and the second graduate understands the importance of investing. So what happens is, the second graduate starts investing, 8,000 rupees a month, same in the same equity markets. Now, but the first graduate, he stops investing on his 30th birthday, right? Because he thinks that it's taking too much of his money. The interesting thing is, on their retirement day, both of them meet again. So the first graduate has invested only for 10 years and he's let that money stay in the markets. The second graduate has invested for 30 years and he lets that money stay in the market. Who's got more money at retirement?
I don't know. What do you guys think? The guy who's invested for 30 years, from age 30 to 60 kind of
Because
thing.
obviously he's put 30 lakhs in the market, the first guy has put 10 lakhs.
Yeah.
The answer is the first graduate.
Wow. Okay.
So at 15% IRR, which is what Sensex has given us for the last 30 years, the first graduate has around 12 crores on his 60th birthday. The second graduate has only 4 crores. So despite putting more money for a longer period of time, it's not worked. So what is really working? The first graduate has given his money, has given his portfolio time. The second graduate has given his portfolio money. And when it comes to compounding, time wins over money. Intuitively, our mind doesn't understand compounding.
Yeah.
And just 10 years from the age of 21 to 31, if you invest and let that money grow, but unfortunately, most of us realize the importance of investing when we are in our 40s. And by that time, a lot of water has flown through.
So definitely start early. So you guys are in the perfect place to start early. Well, we're just about running out of time. Before we wind up, Hemant, what are the first few steps that they should take to start their journey on the correct foot, on the right path?
I think for me, the advice would be that start investing as early as possible, because we just talked about the benefit of power of compounding and can do miracle basically in terms of what you do. Second thing is bring in some kind of discipline in your financial life. Third is, many a time we think that at a young age, when I'm just started earning, let me enjoy my life. Why am I being asked to put some money aside? Trust me, when you bring that discipline, you'll still be able to do what you want to do. Only one good thing will happen with you is that you'll secure your financial future.
Okay, super. Vihang, your final word?
So all of us, Sumit, know that you should be staying invested in the markets, and long term is the way to go. But why are so few of us able to do it?
Yeah.
One of the problems with investing in equity is that the exit options are very easy. Try selling a real estate right now. It will take you at least a month in terms of registration, etc. When we look at the long-term compounding in real estate, the reason why so many people have made money in real estate is because they've stayed invested.
Yes.
And that's because the exit options are very difficult. In equities, you could just, on a click of button, you could redeem your mutual funds. So that's the reason I would say that get an advisor, work with someone who understands these markets. Your problem, your biggest enemy is not the markets, is not the global economy. Your biggest enemy is yourself. Right.
All right, so you got to manage yourself. Thanks so much, Vihang, for that. Thank you, Hemant, for that. And thank you, Aparna, Kiran, Arundhati, and Amay for coming in. Thank you so much for watching. You've been watching L&T Mutual Fund presents Investment Ki Paathshala, partnered by ET Now. We've had a great discussion here, and I hope you've also taken back home some pointers. Thank you so much for watching.
I learned how I need to, plan my short-term, medium-term and long-term goals. Also because so far my thought process has been in investing about how do I save my tax so that I'm not paying much. I learned how, I don't have to keep that as a parameter for investing.
Money is very important, especially when you're starting your career, to sustain your life, to help yourself be financially independent. And this just put a more emphasis on how important it is and what you should do to safeguard it.
My learning is basically that I need to invest a lot more in a variety of instruments that are available, right from which the experts said to in what my peers are investing as well.
It was a very eventful and a very insightful session, primarily focusing on mutual fund as an asset class, that how important it is for an early investor to do it. So we got a brief overview and an expert advice regarding the same. It was very eventful.
I think it was a wonderful interaction with the participants. They have a lot more clarity post the session now. I think the questions were very relevant.
I think it was a great session. I think it's a great initiative. Really enjoyed interacting with the young people who are at the start of their career.